The most expensive document in your divorce is usually the one nobody drafted, not the settlement agreement, not the decree. The order that comes after, the one that actually moves the retirement money. There are people walking around right now who were awarded half of their 401k in a divorce that finished 2 years ago, and they still don't have a dollar of it. The judge signed, the file is closed, and the money never moved. Today, I want to talk about why that happens and about the person whose whole job is making sure it doesn't. So, my name is Fabian Degen. I'm the owner of FMD Wealth Advisors. This is my podcast, Don't Screw Up Divorce. I'm a certified financial planner, chartered financial analyst, enrolled agent with the IRS, certified divorce financial analyst, and certified Quattro specialist. I help people that are going through major life transitions like divorce. I'm supporting my clients before, during, and after the divorce, and I work with my clients nationwide. If you would like my help, click the link in the show description or visit fmdwealth.com to schedule a call with me. We are open for business. So, back to that order nobody drafted. Let's start with what the thing even is. If retirement accounts are part of your divorce, you're going to hear the word Quattro at some point. Usually late, usually with a sinking feeling that it should have been coming way sooner. Quattro stands for Qualified Domestic Relationship Order. Say it out loud a few times and it stops sounding like a disease. Quattro. That's how everyone in the business says it. Here's the plain version of it. A Quattro is a court order that tells a retirement plan administrator how to split an account between two people. That's it. That's the whole job of the document. And here is the part people get wrong. Your divorce decree does not divide your 401k. Your settlement agreement does not divide your pension. The plan administrator is not sitting there reading your decree. They can't act on it. Without a Quattro, the plan will not pay a share to anyone except the employee whose name is on the account. Not won't as in prefers not to, won't as in federal law says no, they will not do it. So you can win the argument, sign the paper, walk out of the courtroom and still own nothing until somebody drafts the order. Now, why does the drafting matter so much? Tax. It always comes back to tax. A Quattro that's done correctly lets a 401k or a pension get split without triggering income tax and without the 10% early withdrawal penalty. The receiving spouse's share moves over as a retirement asset. It stays retirement money. It gets taxed later when the person actually takes it out. So getting it wrong and the same transfer turns into a taxable distribution with a penalty stacked on top. And there's a version of this I see more than I would like. Someone decides the paperwork is too slow, so one spouse just pulls cash out of the 401k and hands it over to settle up. Well, it feels efficient. It's one of the most expensive things you can do in a divorce. You've just converted a tax-deferred asset into a taxable event with a penalty, and nobody comes to undo it for you. So, quick sidebar, because this one causes real confusion. An IRA does not need a Quattro. Different account, different rule book. An IRA gets divided through something called a transfer incident to divorce. Its own paperwork, basically. Its own set of ways to hurt yourself. The most common one, same as before, withdrawing the cash instead of transferring the account. So 401k, 403b, pension, that's Quattro territory. IRA, that's a transfer incident to divorce. Knowing which rule attaches to which account is a real part of what a specialist is bringing to the table. So what does a Quattro specialist do all day? The work sits at the seam where the legal agreement meets the financial reality. That handoff is where a lot of divorces quietly lose money. 4 parts, and I will take them one at a time. First part, valuation. A pension's stated balance is not its value. Two accounts can show the same number on the statement, be worth very different amounts to you after tax. Before you agree to trade the pension for a house or the 401k for cash in savings, somebody should model what each of those things is actually worth in your hands. That's not the work your attorney was trained to do. Good attorneys will tell you that themselves. Part 2, drafting. A Quattro are technical documents, and the choices inside them changes what you receive. Shared interest versus separate interest. Whether survivor benefits are in there, how gains and losses get handled between the day you agreed and the day the money actually moves. The last one matters more than people expect. Markets don't pause for your divorce. I hold the certified Quattro specialist designation, so we draft the order as part of the divorce advisory work and coordinate it with your attorney. Your attorney reviews and files it. The court approves it. Everyone stays in their lane. Part 3, pre-approval with a plan. Most large plans will look at the draft order before it goes to court. Skip that step and you find out the plan won't accept your language after the divorce is final, which is exactly when it's hardest to fix. So you run it past the administrator first, you match the language to what that specific plan will take. Boring, unglamorous, saves people enormous grief. Part 4, follow through. This is the one I'd tattoo on something if I could. The decree does not divide the account. Only a processed Quattro does. And it's genuinely common for the decree to be signed, the file to be closed, and the order to never get drafted at all. Somebody has to track that thing until your share is sitting in an account with your name on it and perfectly invested as part of an actual retirement plan, not parked in cash for 3 years because nobody told you to look. So that's the job. Value it, draft it, get it pre-approved, chase it down. So what brings up the fair question, does everybody needs somebody doing all that? Not every divorce needs a specialist. Let me be honest about that. But a few situations make it hard to go without. A pension is involved. Pensions are the hardest retirement assets to value and the easiest to trade away for too little. A 401k or 403b is getting split. You care whether your share keeps pace with the market between agreement and transfer. Or this one, which comes up more than you think. Your divorce is already final. You were awarded part of your account and nobody ever drafted the order. That's fixable. It's also time sensitive. Call somebody this week, not this year. And more broadly, if retirement accounts are a big chunk of the marital estate, that's exactly when drafting errors turn into six-figure differences. The earlier someone's involved, the more they can do for you. During the negotiations, while the numbers can still change, it's worth a lot more than after everything is locked and the only job left is paperwork. Now, I keep saying a specialist, like you would know who to call. People mix up 3 roles here, so let me separate them. Your divorce attorney runs the legal case, filing, negotiation, court, and eventually reviewing and filing the Quattro. Worth knowing, plenty of family law attorneys outsource Quattro drafting or carve it out of the engagement entirely. Read your engagement letter, ask the question directly. A certified divorce financial analyst, a CDFA, works the money side of the whole divorce, modeling settlements, projecting cash flow, comparing what options are worth after tax. A certified Quattro specialist, a CQS, lives specifically on the retirement order, valuing the accounts, drafting the thing, getting it approved and processed. When one person holds both, the settlement modeling and the order that implements it, it stays connected, which means the fair-looking agreement is less likely to quietly fall apart in the paperwork. If you're shopping with this, here are the questions I would ask. Will you value the accounts or just draft boilerplate Quattros? Do you submit the draft to the plan for pre-approval before it goes to the court? Who tracks the order to completion after the decree? And what happens if the plan rejects it? And how does your fee compare to what's being divided? On that last one, a Quattro fee is usually a small fraction of the account it's protecting. The expensive Quattro isn't the one with the big invoice. It's the one drafted wrong or never processed at all. One more thing, location matters less than it used to. These accounts are governed by federal law and the plan's own rules, not by which county you filed in. So this work happens in person or remotely without much difference. What matters is whether the person doing it understands both the modeling and the drafting and follows the order all the way through. All right, before I let you go, let me hit the 3 questions I get most, and I will keep the answers short. How long does a Quattro take? With plan pre-approval and the administrator who answers the phone, usually 2 to 6 months after the decree. Without follow-through, never is the real answer. That's not a joke, it happens constantly. Do I need a Quattro for an IRA? No, IRAs go through a transfer incident to divorce. Different paperwork, different mistakes. The big one is withdrawing cash instead of transferring the account. Can a Quattro be done after the divorce is final? Usually yes, but it gets harder and it gets urgent. If the account holder retires, remarries, or dies before the order is processed, the share you were awarded can shrink or disappear. So if your divorce is done and no Quattro was ever drafted, that's a this month problem. So here's what I want you to take away. The decree ends the marriage. The Quattro moves the money. Those are 2 different documents and 2 different jobs. And the second one is the one that gets forgotten. If retirement accounts are part of your divorce, find out today who is drafting that order and who is tracking it in the end. If the answer is, I'm not sure, that's your homework for this week. If you want to see how your own retirement accounts would split after tax before you agree to anything, that's the modeling we do. Come to see the numbers before you sign, not after. One housekeeping note here before I sign off. We are not attorneys and we do not provide legal advice. So anything that is being said should not be considered legal advice by any means. Please consult with your attorney with regards to your legal questions. This was this week's podcast, Don't Screw Up Divorce. My name is Fabian Degen. I am the owner of FMD Wealth Advisors. I'm a certified financial planner, chartered financial analyst, enrolled agent with the IRS, certified divorce financial analyst, and certified Quattro specialist. I help people that are going through major life transitions like divorce. I'm supporting my clients before, during, and after the divorce, and I work with clients nationwide. If you would like my help, click the link in the show description or visit fmdwealth.com to schedule a call with me. We are open for business.